you ever felt like you understood everything you needed to know about the market? You knew about the trends, you knew about the support and resistance, you knew about the supply and demand, you knew everything you feel like you needed to know about the market. But yet, you still can't find yourself being profitable. Week in and week out, you're losing on a consistent basis, wanting to switch up your strategy every other week or wanting to buy that new course thinking that's gonna help you. I got news for you. It's not. Stop it. Some help. If this sounds like you at all, I'm gonna let you know one of the biggest lessons I wish I learned when I was in this phase of trading. We call this phase the plateau phase, where you're not really all the way profitable, but you're not all the way like blowing accounts and stuff like that. This phase is a very annoying phase. It's like the breakthrough phase. It's the phase that once you break through this phase, you will become a profitable trader, but there's so much you need to learn during this phase. This is a phase that either makes or breaks you as a trader. This is the phase that most traders quit if they made it past the first phase. So I'm gonna give you some of the best tips I wish I knew when I was in this phase. It's kind of help out a little bit. It's kind of give you a little bit of a path to follow, or just give you some tips that's gonna help you along the way. When I was in this phase lasted 10 months for me. It was 10 consecutive months where I was just either not profitable, I was in the negative, or I was at break even during this phase. 10 consecutive months where I was switching on my strategy almost every other week, buying every course I could name, just trying to find something that clicks for me. What I didn't understand is there's multiple things that I'm gonna learn during this phase. But during this phase, man, it's a struggle. It really is a struggle. The constant losing. And it only clicked in about 2-3 months ago where I kind of understood that there's something wrong that I'm doing and I need to switch it up. Maybe instead of switching my strategy every single week, I should start sticking to one strategy and see how that works out for me. I started thinking differently, and it's all because I read the book Trading in the Zone by Mark Douglas. That's one of the things that kind of helped me get out of this 10-month slump a little bit faster. But I'm gonna give you some tips today that's gonna help you hopefully not have to go through a 10-month slump like I did. The first tip that I recommend is find one strategy and stick with it. So you need to know who you are as a trader. You need to know if you're an intraday, scalper, or if you're a swing trader. Whichever one fits you best. You need to know your personality, and you need to know which one is suitable for you. Stop trying to be like everybody else. This is one thing that I had to learn during this phase. I would constantly try to be like every other trader. I would try to be like Lambu Raul, Doyle, so many other traders, and they have all different trading strategies. They're all swing traders, scalpers, intraday traders. They all have different styles. And I would just simply try to be like them because they was making the most money. Mistake number one you don't want to do as a trader. I would just simply, okay, this trader's making a lot of money, so his strategy has to work for me. So I would start using their strategy, and their strategy wouldn't work for me because they're not me. They are a completely different person than who I am. I wasn't comfortable sitting in a trade for 4 hours straight. That's not something I was comfortable with doing. So I had to first learn what type of trader I was. I had to understand that I like my money now. I'm impatient. I don't really have time to wait. I didn't like sitting in 4 hours. And me switching from strategy to strategy did help with that because it helped me figure out what I don't want. I don't want to sit in a trade for 4 hours. I'm gonna have to wait for a trade for 7 years or whatever just for it to hit TP or nothing like that. I don't want that. So instantly I knew I was a scalper. So then I started looking into the scalpers. Okay, we have Doyle, we have Daniel, we have a whole bunch of scalpers. I started looking into them and see which strategy suits me best. And finding the strategy that suits you best is simple. I'm gonna let you know, I'm gonna let you in on a little key. If you wanna find a strategy that suits you best, look for the strategy that is the most simple to you. Not to everyone, but to you. Whatever strategy makes the most sense to you is the strategy that you need to start using. That is one of the biggest things I wish I understood. In this case, I have two people. I have Doyle and I have Daniel. Both of them are scalpers. But Daniel's strategy was a little too complicated for me. But Doyle's was way easier, and I could understand Doyle's a little bit easier because it's simple to me. It's not simple to everybody, but it's simple to me. So Doyle's strategy is the strategy that I picked, right? So during that 10-month slump, I was like, okay, cool. Let me start looking into Doyle. Let me start buying this course. Let me see what he's about because A, he's the type of trader that I am. And B, his strategy is simple to me. So I found a strategy that is simple to me and that fits my style, and I started using it. Now here's the thing. Once you find a strategy, it's not gonna be 100% off the gate. You're gonna have to back test. You're gonna have to see, you like kind of manipulate it a little bit to suit you best, because sometimes, they have a certain way of trading, but maybe you find this, if you add this in, it's a little bit simpler and easier for you. But once you find this strategy, you have to stick with it no matter what. You have to back test it, and back test it. You have to back test it straight. You have to stick with it. I'm not giving you a time frame. You have to back test it until you know what the win rate of this strategy may be for you. So for me, with Doyle's strategy, Doyle tends to go for a 1-1. I go for a 1-3. Doyle may win 7 out of 10 trades. I may win 5 or 4 or 3 or whatever. But I know at the end, I'm still going to be profitable. That's the thing. When you back test, you don't want to look at, okay, cool. You could kind of keep in mind how many wins and losses there is, but you want to make sure that this strategy is profitable for you. So when you back test, make sure it's profitable. That's how you understand if that strategy is good or you need to do some tweaking to that strategy a little bit. But whatever it is, once you can, out of 10 trades, be profitable, or out of 20 trades still be profitable, that's when that strategy is good. And that's when the strategy, you stick with it. You stick with it no matter what. You understand that there are going to be losses with the strategy, but sticking to one strategy propel you way farther than trying to bounce from strategy to strategy to find something that sticks. Find one strategy that suits you, that is simple for you, and that fits your profile, and stick with it. According to Mark Douglas in Trading in the Zone, Mark Douglas simply puts, an edge or a strategy is simply nothing more than an indication of one thing or one probability happening over the other. It's just simply an indication of a higher probability of it going up rather than down. That's all an edge or a strategy is. So an edge could simply be you using the Fibonacci. That could be a strategy for you. As long as it puts the probability in your favor, that is what defines an edge. As long as it puts the probabilities, which means out of 10 trades you would be profitable, or out of 20 trades you will be profitable, as long as it gives you a higher probability or puts something in your favor when it comes to the market, then you have found a solid or a valid edge or strategy. So when you're looking for a strategy, or when you're in the strategy hunt, make sure you have this checklist right here. 1, make sure it suits your profile. If you're a scalper, swing trader, day trader, whatever it is, make sure this strategy suits you. 2, make sure that it's simple for you, that you can easily understand the strategy, and that it's super simple for you. Not for everybody, but just for you. 3, back test it. Make sure that it is profitable, and out of 10 to 20 trades, you will become profitable no matter how many losses you take. 4, stick with it. Stick with it through the ups and through the downs. So the only reason you should change up your strategy or tweak your strategy a little bit is if you're noticing out of your 10 or 20 trades that you're no longer profitable. That's when you start switching it up to find profitability. Find a strategy and stick with it. Tip number 2, focus on how to think in probabilities when it comes to the market. Start learning how to think in probabilities. So you may think, Omar, how do I think in probabilities? That sounds a little complicated. And I'm gonna break it down to you in terms pretty much everybody can understand. I view thinking in probabilities as looking at trades as a series of trades and not just looking at every single trade. What do I mean by this? Let me relate to you. I look at trading as I'm looking at the NBA playoffs, not the NFL playoffs. The NBA playoffs, every game is a series of 4. It's not just whatever team wins the first game, it's over with. That's it. And move on to the next. No, it's a series of 4. So that means that the first team, they could lose 2 games in a row, but as long as they win the next 3, they can move on to the next round. That's how I look at trading. I look at trading in a term of basically series. So out of every 10 trades, as long as I can win 3, this is with my strategy alone, as long as I can win 3 trades in a row, or not 3 trades in a row, my bad, 3 trades in total, out of the 10 trades, I will still be profitable. That takes a lot of stress off you as a trader, and it kind of eases up, because it's like, okay, I lost this trade, but all I gotta do is win 3 and I'm profitable for the week. So when you're trading, it's way easier to trade and think in terms of series instead of each game like the NFL playoffs. Like, as soon as a team gets to the playoffs, they have to worry about winning that one game, and it puts a lot of stress on them, because if they lose that game, they're out the playoffs. Think of it as a trader term. If one trader, he's just focusing on one trade, and every trade that he loses, it puts emotional disturbance on him every single trade. He's not going to be as profitable as the one who thinks in series. He says, okay, cool. I could lose 5 trades, and that's perfectly fine. As long as I win 5 more, I'm good. Or as long as I win 5 trades out of 10, I'm good. Or if I'm looking in terms of 20, as long as I win maybe 7 trades, I'm good. I can lose 13 trades in a row, or I could lose 13 trades. As long as I win 7, I'm straight. Or in terms of 10, as long as I could lose 7 trades in a row, as long as I win 3, I'm good. And this also kind of piggybacks off of your risk to reward. You could do this with certain risk to reward, because if you have a low risk to reward, obviously you're gonna have to win a little bit more trades. But if you have kind of a higher, you could kind of have that little gap right there. But start thinking in terms of probabilities. That really helped me out, and I started thinking in trades in series instead of each single trade. That also stopped me from projecting my previous trade onto my current trade. So I may have lost my previous trade. Now I'm kind of scared to take my next trade because I don't want to lose this trade at all. But what you need to remember, also Mark Douglas also says this in his book, is that there's a random distribution between every single variable that defines an edge. What this basically means is every loss that you take is putting you that much closer to that win that you need. So when you think in terms of series, it puts you kind of at ease, because you understand that you only need to win a certain amount of trades. So when you're taking these losing trades, it's like, okay, cool, I'm getting closer to my winning trades. The losing trades kind of getting out the way. The winning trades are almost there. And it also validates your strategy as well. So you know, okay, if you didn't meet your quota for the 10 trades, you didn't meet your quota, then you know something went wrong. Maybe it's the week, or maybe something went wrong with your strategy. Maybe you need to back test a little bit. That also is pretty helpful, because it kind of gives you a clear direction. Okay, my strategy isn't profitable this week. What happened? Was it a bad week, or did something wrong with my strategy? Maybe I need to upgrade it or something like that. So thinking in terms of probabilities is so detrimental as a trader. And I think every pro trader thinks in terms of probabilities. And when you're in this slump, you definitely need to think in terms of probabilities. That's tip number 2 I suggest. Last tip number 3, you need to stop stressing. Stop worrying about thinking you need to know everything in this market. You don't need to know everything. It's impossible to know everything. There's so many variables in this market that trying to know everything is physically impossible. There's only 4 things you need to know. And if you remember these 4 things, you will become a profitable trader, no doubt. There is no doubt in my mind that if you only stick to remembering these 4 things, or stick to only needing to know these 4 things, there's no way in the world that you will not be a profitable trader over time. Of course, trading is a time thing, so you have to give it time, of course. But if you manage to only focus on these 4 things while trading, only focusing on needing to know these 4 things, there's no way that you will not be profitable. So these are the 4 things that you only need to remember while trading. 1, while you're trading, is your strategy or edge present? Is it there? Is it at the market? Do you see your strategy at the certain time that you want to take it? If it's there, the next thing that you need to know, how much are you comfortable with risking in order to find out if this is one of your winning trades or your losing trades? You need to know how much you're risking per trade. Simple. So once your strategy is there, once you have obviously found out that your strategy, your edge is there, the next thing you need to know is how much am I willing to risk in order to find out if this is one of my winning trades in my series, or is one of my losing trades. That's the next thing you need to find out. The third thing, once you have found out those 2 things, the next thing that you need to know is where you're going to enter and where you're going to exit. So once you found your strategy, once you see that it's there, right? Once you find whatever you define as an edge, it's present in the market. 2, once you find out how much you risk, how much you're willing to risk in order to find out that this trade is either your winning trade or your losing trade. 3, where you're going to enter, and as well as where your exit is going to be, if it goes in your favor or if it doesn't go in your favor. TP or SL, right? That's the 3rd thing that you need to know. The 4th thing, last but not least, the most important thing, is you need to adopt the mindset that anything can happen. Anything can happen. When you expect stuff in this market, or when you expect things to go your way in this market, that is the quickest way to feel emotional disturbance. That's the quickest way to start revenge trading. That's the quickest way to start up all the bad things in trading. When you start expecting, you need to learn to expect that anything can happen. Literally, as soon as you enter this trade, you need to literally say to yourself, I expect that anything can happen. And I accepted the risk because I am willing to find out if this is either going to go in my favor or not. You accept the risk. But you need to learn how to expect that anything can happen. Don't expect it to hit your TP, because when it hits your SL, you're gonna feel some type of way. Expect anything. Literally say to yourself, every time I enter a trade, I literally say to myself, well, listen, I'm into this trade. I feel my heart is, still bumping and stuff like that. But I say to myself, listen, anything can happen, Somebody around the world could put a $50 million lot size on a sale and just completely destroy my entry. My entry, as soon as I enter the trade, it could just go straight to SL. And if that happens, I'm 100% fine because I expected anything. Or it could go straight to TP. If that happens, I'm 100% fine because I expected anything. Or it could just keep consolidating until whenever. And if that happens, I'm perfectly fine because I accepted the risk and I expected anything. Those are the 4 things that you need to remember. Those are the only 4 things that you need to remember in the market. If you can remember those 4 things and you find one strategy and you stick with it, you start thinking in terms of probabilities, thinking in terms of series instead of one game. You think of series. Instead of thinking the NFL playoffs, you think in NBA playoffs. And 3, you remember those 4 things, you will get out of that slump and you will make it through that breakthrough phase. Those are the 3 things, the 3 tips that I wish I could go back in time and give myself during that 10-month slump. Honestly, I want to give these tips to any traders that are currently experiencing what I was experiencing during a 10-month slump, because I understand that it's pretty demoralizing. It makes you want to quit as a trader. But don't quit. The only way you fail as a trader is if you quit. Just that simple. With that being said, I hope you all have a wonderful afternoon. Peace.